What's going on, guys? I'm going to talk to you about 5 of the top biggest reasons traders don't make it in the stock market or lose a lot of money in the stock market, especially as a beginner. Number 1 is taking trades that are too big. If you have a $200 account or a $5,000 account, you need to have a percent of that as a risk versus trading with your full account. So if you have a $5,000 account, you don't need to be making $5,000 trades, $2,500 trades. You need to be making trades that are a few $100s so you can build your account. Because if you blow your account up, which happens, just about everybody has done it that has made it in the stock market or hasn't made it in the stock market, is you blow up your account and you have to save up money and start all over again. But if you're not trading, you're not learning, right? So make that account last as long as you can and make small, consistent trades. You don't have to trade every single day. Don't get FOMO and just be in and out constantly. And if you lose money, don't keep trying to trade and make that money back, which is number 2, revenge trading. So people will take a loss in the market, say they lose $200, and then they'll go and take more money out of their account and make a bigger trade, trying to get all that money back, and then lose that trade as well, putting themselves in even worse position, because now all those emotions and stuff are what's causing you to make trades instead of actually going off price action and things like that and making logical decisions. All that goes out the window, and now you're just making a random trade, hoping and praying to get your money back, and that's most likely not going to happen. Number 3 is partially fear. People get into the market, maybe they got burnt, maybe they blew up an account already, and they end up taking larger losses and smaller gains. They may be right most of the time, but their losses outweigh their gains. So you need to be disciplined, use stop losses, whatever you have to do, and figure out, okay, hold this stock, I need to hold my winners longer and my losers not as long. So you make your winners bigger than your losers, because if you do this correctly, you can actually have 4 or 5 losers in a row, but then 1 winner that takes out all those losses. Reason number 4 people lose money in the stock market, especially options trading, is chasing the stock. People see a big green candle and they jump on the bandwagon, get in the stock, and then it reverses on them and they lose money. Or maybe the stock has gone up 5 or 6 days in a row and they're getting in when everybody else is selling. So if a stock has gone up 10 days in a row, every day it goes up, it's less likely to continue to go up every single day. The chances of it going up the next day become less and less. So don't chase stock. Reason number 5 traders lose money in the stock market is going against the longer term trend, or not lining up their stock with the market that it's affiliated with. Okay, so like tech, most of tech stock is in the NASDAQ, right? Say I want to buy Apple, right? I'm bullish on Apple. Well, if the NASDAQ's down 50 points, do you really want to be going long on Apple that day? So you're working against yourself, and you're already set yourself up for a potential loss before you enter the trade, because you're bullish and your mind has you like, I just want to buy the stock, but the market is down and you're not aligning the markets together with the stock. So you're going against the trend. Or maybe you've got a stock that's in a long-term downtrend and it goes up for a few days. You need to pay attention. Okay, is it bearish on the weekly and the monthly chart, but all of a sudden it's kind of maybe bullish on the 4-hour chart? That's probably not something that you would be buying as a bullish trade. You need to look at the longer term trade that's bearish to go short in the bearish trend. Don't go against the trend. So that's 5 major reasons traders, especially beginners, lose money in the stock market.